Hello and welcome to Policy Watch, your packed snapshot of the week's biggest business stories, their context, their relevance and impact. I'm Govindraj, Ethiraj. Two important discussions today. First up, we look at 1 year of the Modi government, but importantly, we look at a Crisil report called Modified Expectations, which says why it will be a slow grind up. That question and discussion with DK Joshi, Chief Economist of Crisil, coming up. Prime Minister Modi has been visiting China and South Korea, countries with whom India has had significant trade relationships, particularly China, with whom India has a significant trade relationship as well as a trade deficit. The big question we are asking is, what might be the implications of this visit on the economic front? Joining me for that will be DK Joshi, Chief Economist of Crisil, and Manjeet Kripalani of foreign affairs think tank Gateway House. Well, the big debate, as you know, is the conclusion of the first year of the Narendra Modi government and the key parameters on which the government has delivered both economic and social. The big question we are asking today is, why will it be a slow grind up? Well, that's a question actually Crisil, the rating agency, has been asking with its new report called Modified Expectations. Well, joining me now is DK Joshi, Chief Economist of Crisil. Mr. Joshi, thank you very much for joining us. So, the important point that you're making right up front on the first page of your report is why it will be a slow grind up. Yeah. So, therefore, stating the point that it's going to be a slow grind up. That's right. So, tell us very broadly why.
See, I think, let me just, the report is titled Modified Expectations, so which means that expectations have moderated. I think that's the point we are trying to give through the report.
If you look, whose expectations?
Expectations of almost everyone. I mean, whether it is foreign investor, domestic investor, they are getting rationalized. I think, let me put it this way.
They were, so, as opposed to getting disappointed?
Yeah, it's not disappointment, it's rationalization. I think it was, too much was expected. And I think on two fronts, one is that a quick recovery would happen. The Achhe Din will come quickly. The second was, I think, that Big Bang reforms. I think that was probably the expectation of a number of foreign
both direct as well as portfolio
foreign investors, I think, and also I think it was a narrative of foreign governments, etc. I think who were looking at India. So the point is, both of them, we are very clear that now it's going to be a slow process. The reforms will proceed, but in a slow manner. There are hurdles in the Rajya Sabha which need to be crossed. There's consensus making which needs to be done, and you run the risk of both delay as well as dilution to some extent. But on the growth front, let me just emphasize that the speed of recovery is going to be limited, because we don't have instruments to fire growth quickly, which is, we can't cut interest rates very sharply, and we can't increase fiscal spending. So it will have to be done through slow structural measures.
And you've talked about private consumption and private investment. So I'll come to that in a moment. So if I were to sum it up, would it be fair to say that this is really the 1 year of the Modi government, a lot of work in progress in terms of policy initiatives that have been initiated. Second is benign indicators which are working in our favor. And finally, there is a sense that things are being cleaned up.
Absolutely, I think so. This is a mix of good luck. It's also some good policy initiatives, and it's also, I think, the improving macro environment in terms of whether it is growth or it is inflation or it is current account deficit. So all these three things come together.
So these are the 2 or 3 indicators that have worked in our favor, whether it's current account, inflation, interest rates, which are looking like they're heading downwards. But on the other hand, as your report points out, private consumption and private investment particularly, which could be the biggest GDP kicker, is just not happening.
It's
not sufficiently happening.
It's not happening in the sense, I think the corporates will still invest as much they invested last year, but the momentum in investment, the growth in investment is not happening, and that is very clear because the demand is not there. If you have capacities which are unutilized, so you will not create new capacities, and for private corporate sector to come in, they need some demand visibility. They need to be sure that their products will have enough demand in the system, and that is not happening as yet.
And you've pointed out in several places in the report, and you've also pointed out that there is a capacity utilization problem which also links to the demand. I mean, industries like auto, which we thought was doing well, the numbers are looking good, but you're saying is only at 63% capacity utilization. That's frightening.
That's right. I mean, that's right, and it needs to go up. And I think that auto sector is also impaired by the fact that the commercial vehicle segment is still seeing very,
so that's weighing down the overall auto sector.
It also is.
But when you say 63%, it's obviously the entire auto sector.
It is entire auto sector. It's also entire auto sector, and also I think even the car segment is not seeing very high utilization of capacity. So I think there is a general what happened was in 2010, 2011, when the growth went up, the exuberance also went up, and you created enough capacities. And after that, the demand came down. So it's pretty obvious that the capacities that you created are not getting utilized. So it is, I think, in most of the manufacturing sector, this is the case.
So let's talk about demand. So, so there is money in the system. Savings rates are still high. I mean, India's savings rate is high. People are still saving. People are still buying. I mean, whether it may be real estate, gold, a whole bunch of other things, even getting back into financial assets. So in a way, but yet this is not translating into the kind of demand that would drive the entire economy or the overall economy.
Absolutely. I think part of it is if you look at the rural India, the agriculture hasn't done well. So that has been a bit of a dampener for rural demand. And then rural wages.
So when you say it's not done well, are you referring to the recent rains problem, or is it the?
No, it is last year was little over 1% GDP growth in agriculture because rains were lower than the normal by about 12%. Then you got a shock from the unseasonal rains, which did further damage. And I think on top of that, there is some fear that the monsoons could not be normal. So it's not.
But at the same time, the data in your report also seems to show that the linkages between a bad monsoon and agriculture GDP are somewhat reducing.
They are reducing. It depends on how well the rainfall is distributed. I mean, so you can't look at the quantum of rainfall deficiency and predict agriculture. You have to look at whether it is timely, whether it is how it is distributed across geographies. I think that's also critical.
So agriculture is one reason why demand is weak. What are the other reasons? If that really is a fundamental reason for the economy not getting a sort of
that's one reason, and I think the other reason is that the investments are not happening, the jobs are not getting created. So I think the urban India is also chugging along slowly. And then finally, I think the rural wages have been very slow to rise. I mean,
so wage growth has been coming down sharply.
So I think that all those things work against demand, and I think the external demand scenario is also bad, which helps our production. The exports are not doing well at all. So from the external side as well as from the domestic side, till now things have not been good. But now I think we believe that private consumption will start moving up if you get a normal monsoons, because there's some kicker from very low fuel prices or there are savings from low food inflation. So households are getting some kick to their discretionary spend.
So if I were to ask you, I mean, this is really an Aam Aadmi question, right? So what really triggers the Aam Aadmi's consumption pattern or cycle, as we've seen it perhaps in previous cycles?
One is that he has to see these benefits from
over a period of time.
That to be sure that they are there to stay. If the benefits are seen as temporary, transient, then there is something called a temporary income hypothesis, where I think people will rather save than consume, and it's exactly what is happening in US also. In US, is for a different reason. They are paying back their debt rather than consuming. In India, I think they will save rather than consume. But right now, the income itself is not moving. I mean, the employment generating sectors like manufacturing are still very weak.
Right, and I'll come to that in a moment. So when you talked about private consumption and private investment, when it comes to private investment, one reason we are seeing a lack of activity is because there is overcapacity. The other, which your report talks about quite extensively, is non-performing assets.
Yes.
And one of the frightening figures again I noticed was that between 2012 and 2014, 40% of non-performing assets were restructured, and they've all become non-performing assets again.
So which reflects the underlying weakness in the system, which also means the stress in the infrastructure sector is yet to be addressed. And most of
are most of these infrastructure? I mean, would you have
most
an
of
idea?
it is infrastructure. Most of it is infrastructure, road construction. I think these are the sectors where the leverage has risen. The debt to equity ratio is very high, and these are also the sectors where I think there are issues of policy paralysis or insufficient policy measures, I think, kicking in. In some cases, coal is not available. So multiple factors came into play.
So NPA is now at 4.3% gross. Right. So is that something that we should be worried about? I mean, will that be something that will fundamentally restrain this economy from?
It will. Because financial sector actually lubricates the economy, and in the Indian system, the banking sector is the key part of the financial sector. And if the economy starts moving up, then the banks will not be in a position to fund the growth. I mean, so to say, because unless they clean up their balance sheets, they cannot be aggressive with their lending.
Right. The other point that you've made in the report is the inability of this government to pump prime. Right. So we've seen a slew of announcements, particularly in railways and of course the road projects and so on, where the government is clearly putting in money or putting money on the table and saying, okay, we've got to get things going. So this also is not translating, nor in, as I understand from your report, seeming to translate in the near future into real economic growth and equilibrium.
Well, as far as the government's pump priming is concerned, I think let's be clear that they don't have enough money, the kind of money that is required to pump prime. They have decided not to focus on spending, increasing the consumption expenditure, but they are focused on key infrastructure sectors that you said. But I think these are these will happen, but they can't kickstart the investment cycle. The previous growth upturn that you saw was led by private corporate sector investment, where they were rising at 40% per annum, and right now they are actually falling. I mean, so the point is, unless you get the private sector back into the game, I think the investment revival will take time, and governments move to improve investments in the public sector. That will continue, that will keep the investments going, but it's not enough to revive the overall investment cycle.
So of course you've said that it will be a slow grind up, and therefore we should be prepared for the long haul. But on the other hand, what could we be hoping for, or what could be the quick triggers? Could it be sentiment? Because that usually tends to turn things around more swiftly than perhaps we would have expected.
Sentiment is obviously still positive. I think if you look at the expectation surveys or RBI's consumption expectation survey, I think those are still looking good. But I think the confidence is more for the medium run. It's not immediately for the short run. I think that's also getting reflected from there. So I mean, I would say that the expectations need to be managed, that we are in a process where there's no kicker from the global side, and domestic side you are more relying on the structural measures which improve your growth potential, but not necessarily push your growth up in the short run. And so I think because of these factors, I think we have to be prepared for a slow lift in growth.
Right. So let's talk about the slow lift, and we'll come to jobs after that. But in this slow lift, what could be the things that could go wrong, right? So we are all assuming that the factors that we've lined up now are all, or the stars are all sort of aligned. But what could go wrong?
One could be the monsoons, which
so you've said it could be a 0.5% negative GDP, and a good one of course could also be positive.
I think it will be negative for agriculture, and then it will pull down we have a forecast of 7.9%, it will become 7.4% if agriculture fails. So that's one. The second, I think we need to watch out for is from the external side, which is the crude prices. I think they should not play a spoiler. I think if crude prices go above 70,
very well could.
If they go above 70, then we have a risk. I think right now most people are forecasting them at around 65. And the other is when Federal Reserve begins to raise interest rates. I think something which a governor has been often pointing out, that it carries the risk of very volatile capital flows. So you need to be prepared for that as well.
Right. So that's external. And is there anything else on the internal apart from monsoons?
I think apart from monsoons, from the policy side, I think the two things very critical is one is the GST, which is stuck in the parliament. That's very important for confidence making, and then second is the land acquisition bill. I think these should see the light of the day without much dilution. Okay, so land acquisition, you're seeing it as a sentiment kicker as well as it's a measure to raise your growth potential, but if it happens, then people will get more confidence in the economy.
Okay, so now let me come to the sort of last point in this. Jobs, right? So obviously all of this means that we cannot be creating jobs or even going anywhere near the kind of targets that we are hoping to, because the preconditions don't exist.
Job creation will be a very big challenge, I think, because manufacturing sector is one of the segments which promotes jobs, and manufacturing, despite I think because of several factors, I think some of which legacy, some of which is global environment, I think manufacturing is very, very weak right now. It might lift next year, but it can't lift to the levels that it creates enough jobs. Anyway, manufacturing is becoming less labor intensive. Second is, I think for job creation you need push to health, education sectors, which again are more labor intensive than other services, and we haven't seen that kind of push to even from the budget. So that's why I feel that the ability to create jobs is very limited, and unless private corporate sector come back, starts investing, I think only then you will see jobs.
So that's, in some ways, that links to the Make in India manufacturing and so on and so forth. So going forward, so if assuming there have to be measures taken or steps taken to make this from a slow grind to a faster grind up, what needs to be done?
Well, I don't think we have any tools to fast
even if we were to cut interest rates dramatically, even if we were to...
No, but you can't do that. I mean, then you will, if you cut interest rates dramatically, then you create an inflation issue. And I think central bank has a target now, so they cannot go overboard. It's not like the Europe or Japan, where I think inflation is not an issue. It's still an issue for us. So I don't think central bank can do that. Fiscal spending, if you do, then your fiscal deficit goes out of... So you don't have the typical policy instruments to fire growth, fire demand in the system. So it has to be done through structural measures, which is a good way of doing it in a way, because
you're cleaning up the past.
You're cleaning up, and you are also creating more capacity in the system. So whenever the efficiency will improve, whenever I think the need for creating, when the demand picks up, I think it will be less inflationary, because your productivity levels will also go up when the demand picks up.
And more strong in its nature, right? We've run out of time, Mr. Joshi. Modified expectations, why it will be a slow grind up, though of course everyone will hope that it will be a faster grind up. We need to take a break. We'll be back on Policy. Welcome back to Policy Watch. Prime Minister Narendra Modi recently visited China, South Korea and Mongolia. The question we are asking is what might be the policy and trade outcomes of this visit, particularly China, with which India has a large trade relationship but also a large trade deficit. Here's a report.
The end of a 6-day, 3-nation tour, seen by analysts as extremely important from both the economic as well as strategic perspective. On the trade and economy front, Prime Minister Modi achieved key forward movement in a range of areas, with particular focus on his efforts to woo companies to manufacture in India, his pet Make in India program. In the first leg in China, the two Asian giants signed 24 agreements at the government level. They point at close cooperation in the areas of transportation, mining, earthquake engineering, space engineering, vocational education, skill development and consular access.
I stress the need for China to reconsider its approach on some of the issues that hold us back from realizing full potential of our partnership. I suggested that China should take a strategic and long-term view of our relations. I found the Chinese leadership.
Industry-level interaction between Indian and Chinese entities was more substantial in nature. In all, 26 partnership agreements and MOUs involving commitment of $26 billion were signed. Indian telecom major Airtel signed 2 agreements with China Development Bank. Sun Group signed an MOU for a 5,000 megawatt power plant. Adani Group also signed a deal for funding of the Mudra power plant. Welspun, Infosys, ILF&S also signed deals to boost trade in their respective areas. Prime Minister Modi hailed cooperation between the Asian giants. In South Korea too, there have been definite steps forward. Prime Minister Modi visited Hyundai's shipbuilding facility in Ulsan. Hyundai and electronic giant Samsung are the biggest Korean investors in India's automobile and electronic sectors. Hyundai announced that it was considering setting up its 3rd factory in India. India and South Korea signed 7 bilateral agreements in transportation, commerce and heavy engineering sectors, including one to avoid double taxation. South Korea pledged to invest $10 billion in India's infrastructure projects and smart cities. All eyes now on the gains to actually start rolling in. Krishnanand Tripathi's report for Rajya Sabha Television.
Well, joining me now to discuss this is Manjeet Kripalani, founder of think tank Gateway House, and also DK Joshi, chief economist of Crisil. Manjeet, let me begin with you. A comprehensive trip once again by the Prime Minister in this part of the world, South Korea, China. What does this mean and what does this add up to?
Well, the China trip was really important. And as you can see, we've signed 22 agreements with China. There's been a business engagement as also a government engagement. The Indian government has signed educational agreements, infrastructure agreements, and the business community has kind of sort of backed it up with the softer stuff, like most of them are really getting debt from Chinese banks in order to buy Chinese equipment and build out. But this is really significant because this is the first time I think that there will be an actual engagement with China and India. The e-visas, giving Chinese visas, is a big sticking point, and that has been taken away. I think that this is significant. We've got from the 3 countries actually 3 kinds of energy. We've got solar from China, we've got uranium from Mongolia, nuclear, and we have LNG terminals being built by Korea. So this is significant in many ways, and this all blends into the new infrastructure build out that is going to start taking place in Asia.
Okay, great. So I'm going to come back to you in a moment. Mr. Joshi, how do you see the visit in terms of what it's achieved economically, and more importantly, where we stand vis-a-vis China, at least in a competitive advantage point?
Well, I think if you look at the size of the economy, Chinese economy is the 2nd largest in the world in terms of purchasing power parity terms, and India is the 3rd largest. But we also have enough trade between both the countries, which has been only rising. I think we've been the fastest growing trading partners. But the problem there is we run a $40 billion trade deficit with China, and which is we basically provide them raw material kind of stuff and we get the finished product. So the value addition stuff. So I think that the point is that I think we need to correct this, and they had talks about correcting this trade balance. I mean, that would be a big challenge, how to amicably correct the trade balance. And then I think the other thing is the railways, which I think government focused on. I think there's also agreements on improving the railways, the high speed trains, not the super fast trains, but increasing the speed of the existing trains, where Chinese support in terms of technology, money, etc. can come in, and training. So I think there is hope in his visit to China, and also I think South Korea is also going to give I think 10 billion, somewhere around that. The only country where we'll be providing financial aid or something of that sort is Mongolia, but I think the engagement will still be very fruitful.
Right. So you're saying economically things are playing out. Manjeet, how does this sort of hold off against or stand against the geopolitical concerns or issues that have been floating around in the past?
Well, I think Asia is really going to come together. You may have read that Japan has just introduced announced $110 billion fund that is bigger than the BRICS Bank and AIIB also at the moment. Obviously, there's a competitive competition with China going on here between the US and Japan, but with infrastructure investment from the BRICS Bank, which is the need for Asia, with infrastructure investment from AIIB, which has been set up for infrastructure, Japan's fund, and the G20 giving money for infrastructure, we are going to see a giant build out of infrastructure in Asia. And I think the spillover won't be just physical infrastructure, it's going to be the soft stuff too. So the financial markets, we're going to see, they're going to get integrated. Geopolitically, this just means that really the Asian century can arrive, provided India and China can keep their rivalry at bay as they have, the way the US and China has. We unfortunately share a border with China. Those border dispute resolutions have not actually worked out because although there are resolutions to be worked out, because of the constant incursion, what's happening is only border management.
Right.
So we need to work these out, and perhaps more investment and greater understanding of China, of India, and vice versa.
So I think the larger question is, so did this visit, I mean, really provide the platform or the starting point to go on to all of that?
Yes, absolutely, absolutely.
And it doesn't look like it could slide back once again to...
You know, there are always slide forward. There's always a slide back and a step forward, and that's the way life is. That's the way the world works. But I think it's all very positive, and the key is for a greater understanding between Indian citizens and Chinese citizens with each other. China is now turning to Buddhism in a very large way. They view India as the birthplace of Buddha. This is a great place for greater understanding. So if India can in fact realize the potential of the Nalanda University, which is being planned, get lots of Chinese students, in some sense the Silk Road that China is dreaming about might actually come back together culturally also.
Okay, that's an interesting point. So let me ask you the competitive advantage question, Mr. Joshi. So we talked about the trade deficit. There is a sort of desire for everyone to grow. India has dreams of becoming a very powerful manufacturing base. There is a Make in India initiative. How does this play out? Because from a real business, real competitiveness, real export import, do things really work well for us, or are we sort of stacked up sufficiently enough? Well,
we are far behind China as far as the ingredients for producing manufacturing products are concerned. I think there's no doubt about it. So the only hope in the short run is that as China moves on to higher value added products and leaves behind labor intensive stuff like textiles or leather, I think we latch on to that. Until now, we have not been successful in doing that because other countries are taking that pie away. Bangladesh is more competitive in textiles in some ways, and also I think the Vietnam, etc., are coming up fairly strong. So I think our competitive advantage as far as these labor intensive skill intensive activities are concerned has not been very good.
So that's really the big question, right? So what could be India's strength in going forward, considering that we want to play a greater role not just in the world but also specifically in this region? But if we can't produce products or services for that matter which have a
I think we need to be more efficient, and that's been the focus of the government. I mean, ease of doing business, making it more transparent, decision making being much faster. I think all those things come into play. I think this is what I think decision making is probably much faster in China because of the political system they have. But I think in a democracy it will take more time, but I think you are on a surer footing over the long run.
Right.
So I would say that I think we need to improve our competitiveness not only in producing goods but also in logistics and so on and so forth. So I think it's a long haul for us to compete with China. But China will have to open access for some of the products that we produce. It could be agriculture, it could be pharmaceuticals, etc. Only then you will have a clearer understanding.
Right. Yeah, Manjeet, sorry.
So in fact, I think in this matter, China might just help us along. China is aging faster than India. They are actually getting hammered by their China price. They have cut their cost of their goods is so low that they're getting hammered. They can't move up the value chain. So we might find in fact that Chinese are pushing and encouraging Indian manufacturing at a lower level to take place because the Chinese population wants to move up. Also, as they're aging, India can provide, the new model is going to be that India can also provide services to China. You're going to have this huge aging population and there's nothing to serve. They don't have a proper healthcare industry. These are all things that India can step into. We don't only have to do manufacturing. And these will be new areas that India can will actually be at an advantage in Asia and particularly with China.
Right. So you feel that, I mean, I'm sort of coming back to the point that I asked earlier, but you feel that we've now in some ways put back or put behind our somewhat turbulent past and now are ready to focus on the sort of clear advantages of working together? And I don't mean turbulent past in the distant past, but more recent.
Yes, I think we are, both India and China now realize they have commercial needs. And the commercial needs really have to overcome the geopolitical problems. However, we do have Akshay Chin, we do have Arunachal Pradesh. I think that we have a Prime Minister that is willing to work at these and make them happen to India's benefit. So as the infrastructure build out towards Arunachal Pradesh takes place, China will withdraw. Just now we've been exposed, we've been weak. It's been okay for anybody to walk in. When we show our strength, which is what China respects, they respect strength. I think that we will see a resolution.
Okay, so let me get a sum up kind of response from you, Mr. Joshi. So economic challenges and opportunities broadly for India in South Asia, in the ASEAN context. I mean, not that we are there, but in the context of working with these countries.
Well, Asia is probably the fastest growing part of the world. Right now it is on a slow motion because I think it's the trade intensity of the global growth is reducing and we are not benefiting so much. I think the inter-regional trade is what will keep the growth going in the region. And I agree that I think eventually the commercial and economic interests dominate over other issues. Even if you look at, we had so many problems with China, but look at how fast the trade has grown. I think that's a good example of how the economic interest always prevails.
Right. And you also, do you agree that, for instance, with the BRICS Bank and the new Japanese bank, the sense of competitiveness for lending, things could actually get a kick up?
It could get a kick up, but we have to improve I think we have to give policy certainty to those who are investing in India. I think any investor cannot take the regulatory and policy risk. They can take the commercial risk or the business risk. I think we have too much of it right now, and government is trying to address that slowly.
Right. So, Manjeet, eco-political opportunities and challenges, or challenges and opportunities
for India and
forward,
China.
yeah, for India, China, the region.
I completely agree. I think that we need to get our policies right. We need to be able to enforce our regulations and our laws. So a lot of the work is actually going to have to happen on our side. If we can get that right, yeah, we can take on any competitor, whether they're in our country or outside.
Well, thank you both for joining us. That's all we have time for on Policy Watch this week. We'll be back next week, same time. Thanks for watching.